All right, hello guys. So today we're going to be doing a really quick one. We're just going to go back to the basics here. I'm going to be talking about how to read a stock quote, and we're going to do this in a quick time just in case you guys are studying or trying to place an order. So let's get into it. So I pulled up a stock quote here on my brokerage site. At the top there, you're going to see the actual price that it's trading at. So that is what's called the last price that it traded. So $3,564.12. It's going to show you how much is up today since the previous close. So since the close of yesterday, which usually means the open of today in most circumstances. So basically, since it started trading today. So this, for example, is trading $59.56 up, or 1.7%. Okay. Now, the next thing that we're going to be looking at is the bid and ask. So this is for lot sizes. So we have lot size afterwards. I'll explain what that is. But a bid is what the person trying to purchase is asking to pay for it. Is bidding to pay for it, and the ask is what the seller is asking to sell. Right. So a trade happens when a bid and an ask meet. Okay. So there's always going to be a spread here. In this case, the spread between the bid and the ask is 33 cents. It could be as low as 1 cent, or it could be as high as a few dollars on very thinly traded volumes because of how many people are trading, right? So we get into volume a little later. So when you place something called a market order, you're getting it at the most available price. So for example, if you were going to be purchasing, so buying, and you place a market order, it will get you the best price that's available at the time you place the order. So the best price is what the person is asking, right? Because you're buying it from the seller. Okay. So when you're placing a market order, you're more than likely going to get this price unless someone was filled in that instant second before you. If you're trying to sell the security, you want to sell it to the person bidding. So then you would look more at the bid. Okay, so that's the difference, and that's how day trading is done. And if you don't want to hold on to securities every day. Okay, next thing we're going to talk about is lots. So basically, at this bid and at this ask, there's one lot for this bid and one lot for this bid. So a lot is it depends on the amount of shares that is available. So one lot is generally 100 shares, and this is true for securities that are, I believe, are over $3, or $1. I can't exactly remember, but basically, if it's not a penny stock, most blue chips that you're going to be filling portfolios with, or you see portfolios with, are 100 per lot. They could go up to 10,000. 5,000. So you have the 1,000, you have the 5,000 ones, depending on the penny stocks as well. If you'd like to know the exact lot size, you can actually just Google it and it'll give you the price comparison. However, for this purpose and most of your purposes, a lot will be 100 shares. So here we can see that the ask is 356466 with a lot of 1. So how you would read that is there are 100 shares available at $3,564.66. Okay, so here's what I want to explain. Basically, if you're buying shares and you're trying to calculate how much you want to buy, right, because of how much you have available and how much it's asking, and you have to kind of approximate there. You have to look at if you're buying a lot, or what's called an odd lot. Okay, so if you're, for example, want to buy 105 shares, right, then you might get 100 shares for whatever the bid for whatever the ask was in case of buying, and then those 5 shares could be filled at a higher price, okay, or lower, because it has to take from another piece of the order. Okay, so you're only kind of looking at the 100 shares or 200 if you're buying in these even numbers for the price. The other kind of stragglers will be high, more or less. Okay. Okay, so next we have the open. So this is simply what it opened at today, and you can see the difference from yesterday as well. So you can see yesterday what it closed at and then what it opened at. So again, the $59 is not in relation to what it opened at. It is in relation to what it closed at yesterday. Okay, so I do see some people making that mistake sometimes, so don't get that confused. The high low is the high low of the day. So what was the highest it reached, what was the lowest it reached at the time you're viewing it, of course. You'll see the actual day's range after 4 p.m. When the markets close, and the volume is how many shares have actually traded hands between buyers and sellers. So depending on certain stocks, here we have 1.2 million with about 1.5 hours into the market. So that's usually a higher volume, which could be actually normal for blue chips, but something more thinly traded, 1 million volume would be very, very high for them. Okay, so we have, as of November 29, 2021, and that's when I'm shooting the video, but a lot of brokerages will have that refresh. If you don't, you can actually refresh the page the traditional way by pressing F5, or just pressing the spinning thing at the top left corner of the screen, and you'll get a refresh quote. Okay, so that's basically how to read a quote. There are more things that you can see from a stock. So the high low of the year or of the year to date, you can actually see the graphs, but that's kind of the more overview of it. This is the quote if you're just if you're just looking to trade stock and want to see kind of the price fluctuations. If you want to look at something like funds or options, those are completely different quotes. So I can make different videos on those. So let me know down in the comments if you'd like that. But that's it for you today. So that's how to read a stock quote. I hope it was enlightening. I hope you guys are able to read them better now and make your decisions based on that. Well, not just on that, but also on your fundamental analysis, but basically help you to make your decisions. So like, comment, and subscribe. Let me know what else I can talk about, and I'll see you guys in the next video.